Silver is doing exactly what it always does before it scares people out. Big moves, sharp pullbacks, and confusion everywhere. One day it feels unstoppable. The next day it feels like the top is in dot. And right now, a lot of people are asking the same question. Is silver about to correct? Or is this just another shakeout before the next leg higher? If you've been holding silver for a while, this volatility doesn't surprise you. But if you're newer, or if you're watching price action near $120, this market can mess with your head fast. So today, we're not doing hype. We're not doing doom. And we're not pretending we can predict the next candle. We're going to break down where silver actually stands right now, why a correction would be normal, not bearish, why $120 matters psychologically and technically, how money supply, not headlines, drives the bigger trend, and how to handle volatility differently, depending on whether you own physical silver or paper silver. By the end, you should feel calmer, clearer, and more grounded, not emotional. Let's start with reality. Silver has already had a massive move. There's no denying that. When something moves this fast, two things always happen. Late buyers chase strong hands, start locking in profits. That doesn't mean the bull market is over. It means the market is breathing. Corrections are not failures. They're pressure releases. And silver is famous for violent corrections inside long-term bull markets. That's why silver frustrates people more than gold. Gold moves like a politician, slow, controlled, boring. Silver moves like a rebel, emotional, explosive, and unpredictable. Right now, silver is stretched in the short term. Momentum traders see that. Algorithms see that. And smart money knows retail emotion is high. That's why the idea of a pullback scares people, because they confuse short-term price behavior with long-term trend direction. These are not the same thing. A correction doesn't kill a bull market. It resets it. If silver never corrected, it would actually be unhealthy. The real question isn't if we pull back, it's how deep, from what levels, and whether the structure stays intact. That's where $120 comes in. Let's talk about $120 honestly. $120 is not special because of math. It's special because of human behavior. Round numbers matter. They always have. At major round levels, traders place, sell orders, media narratives, shift, weak hands, panic, strong hands. Wait, $120 is a level where early buyers feel rich, late buyers feel nervous, shorts get tempted, and volatility spikes. That's not bearish. That's market psychology. Now, here's what matters. If silver pulls back while volume cools, holds above prior support zones, and doesn't collapse structurally, that's not a top, that's consolidation. And consolidation near highs is strength, not weakness. What you don't want to see is heavy selling, failed bounces, loss of key support levels, panic volume. So far, we're not seeing that. We're seeing emotion, not breakdown. And emotion is part of silver's DNA. Now, let's zoom out, because this is where most commentary fails. Silver doesn't move because of tweets. It doesn't move because of YouTube videos. And it doesn't move because of chart patterns alone. Silver moves because money changes. Value. The M2 money supply tells you how much currency exists in the system. And over the last few years, we've created more money than at almost any time in history. That money doesn't disappear. It looks for shelter. Some of it goes to stocks, some to real estate, some to commodities. Silver is both a monetary metal and an industrial necessity. That's a rare combination, even if price corrects short term. The macro pressure underneath silver hasn't gone away. Debt is still growing. Currency purchasing power is still eroding. Governments are still trapped. That's why silver corrections feel scary, but don't last forever. They're counter-trend moves inside a bigger monetary reality. Here's where many people make mistakes. They treat physical silver and paper silver. They're saying they're not. If you trade paper silver, volatility matters, timing matters, stops matter. If you hold physical silver, volatility is noise. Corrections are opportunities. Time is your ally. Physical silver isn't about trading candles. It's about owning something outside the system. Paper silver is about exposure. Physical silver is about control. So when price pulls back, traders panic. Stackers prepared. That difference in mindset is everything. If your time horizon is measured in weeks, corrections hurt. If your time horizon is measured in years, corrections help. Here's the grounded approach. Don't chase green candles. Don't panic on red ones. Watch structure, not feelings. If silver pulls back, look for stability. Look for higher lows. Look for cooling momentum. If silver breaks higher, expect volatility. Expect shakeouts. Expect fake breakdowns. Silver never moves cleanly. It never has, and that's why it rewards patience more than prediction. Let me say this clearly. If silver corrects, it doesn't mean you were wrong. If silver pauses, it doesn't mean the story is over. And if silver scares you, It's doing its job. The real mistake isn't volatility. The real mistake is letting emotion force decisions you'll regret later. Silver has always been a long game, played in short bursts of chaos. If you understand that, you stop reacting and start positioning.